Avoiding stock market peaks, how to break the cycle of overpriced purchases. Have you ever experienced the frustration of buying a stock only to see the market immediately decline? This common phenomenon can make you feel like the market is working against you. However, there is a simple reason behind this cycle. In the next few minutes, we will explore why buying at the top of the market leads to losses and discuss strategies to break this cycle and increase your chances of success in the stock market. Understanding the phenomenon. When most people decide to buy a stock, the information about it has already spread to a large number of investors. This means that the buying frenzy has already taken place, leaving little room for further buying. Consequently, the stock can only go down, resulting in losses for those who bought in late. This situation arises because people tend to rely on buy signals that come too late. They wait for the stock to gain popularity and for others to start buying before they jump in, ultimately buying at the top of the market just before it starts to decline. Being proactive. To avoid buying at the top of the market, it is crucial to be proactive and get ahead of the crowd. Instead of waiting for a stock to gain popularity, conduct thorough research and identify potential opportunities before they become widely known. By buying in early, when the stock still has room to grow, you can increase your chances of making profitable investments. However, this approach requires knowledge and skill in analyzing the market. Educate yourself. To effectively identify promising stocks, it is important to educate yourself about different investment strategies. This can involve studying financial statements, analyzing market trends, and keeping up with news and industry developments. By acquiring knowledge and skills in these areas, you can make informed investment decisions and avoid relying solely on late buy signals. Maintain a long-term perspective. Attempting to time the market and make quick profits is a risky game that often leads to losses. Instead, focus on building a diversified portfolio of quality stocks and hold onto them for the long haul. By maintaining a long-term perspective, you can weather short-term market fluctuations and potentially benefit from the growth of your investments over time. Conclusion. Buying a stock only to see it decline shortly after is a common experience for many investors. However, it is important to understand that this often occurs because of buying in too late, when the market has already peaked. To break this cycle, it is crucial to be proactive in your investment approach, conduct thorough research, and buy in early. Additionally, maintaining a long-term perspective and focusing on building a diversified portfolio can increase your chances of success in the stock market. By following these strategies, you can avoid buying at the top of the market and potentially achieve profitable investments.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.